some breaking news that's just come in, and that's from SEBI, which has warned investors to be cautious against certain SME companies, some of which paint an unrealistic picture of their operations. SEBI has tasked investors to not invest based on tips and rumors floating around on social media platforms. In fact, Anurag Joshi, my colleague, is gathering more details. Anurag, so what has SEBI said as far as this particular notice is concerned, this particular warning is concerned?
The Securities and Exchange Board of India has warned investors to be watchful and careful about certain practices that are related to SME companies. SEBI has asked investors to be cautious while investing in such securities. SEBI's observations follow its findings that post-listing, some SME firms and specifically their promoters are resorting to projecting an unrealistic picture of their operations and also showing a very rosier side of the business to attract investors, and they are making announcements which could potentially be misleading for investors. So SEBI has asked investors to be very careful about such kind of announcements, and these kind of statements from such SME companies and the promoters could typically relate to corporate actions such as bonuses and stock splits and preferential allotments.
All right, so SEBI's word of caution coming in on these SME IPOs, and of course to discuss that further and the ramifications of that, we're now joined by Ashvin Parekh, the managing partner at Ashvin Parekh Advisory Services LLP. Thank you very much, sir, for joining us here on ET Now. I'll come back to you in just a bit, but let me take our viewers through some data that's been sourced from Prime Database, which shows that 152 SME IPOs this year have been launched with an average issue size of 33 crores and an average oversubscription of nearly 200 times, and that's perhaps gives the kind of the magnitude of IPO interest, the bumper listings as well, and the expectations of returns that we've been seeing, and which is perhaps is what is leading to these malpractices. But give us a sense in terms of numbers on how serious is this issue, Mr. Parekh.
Sure. So see, 2 or 3 things have happened, around this. One, of course, is that we all know that in many cases, not all cases, but in many cases, the financial statements prepared by the SMEs, particularly the small size units, and the governance framework in some of these organizations may not be in keeping with what is normally expected by retail investors, from the good governance point of view. Now, in such scenarios, you may come across situations where the promoters, may have several motives behind putting up, let's say, through social media or through, let's say, other means, sort of information, wrong information, rumors, and then they sometimes use even the intermediaries who fall prey, to some of these practices. So, you will also realize that by and large, the kind of multiples which are normally applicable to companies and some of these SMEs who have really gone for small size IPOs, are not relevant at all. They are so burnt up. They are so, sort of overrated that there is a good reason for the retail investors to regret the participation in such sort of, in buying such equity from the market, let's say, once the IPO is done and once it is listed. So, and then we all know that the oversubscription has been of a size where there is demand chasing the supply, basically. So in such a scenario, this warning from SEBI is very, very important. I suppose what will follow, as I can see, is after this warning, maybe SEBI will get even more stricter about the disclosures, about any kind of social media sort of, coverage that any one of these listed entities may have carried out, which may be misleading and which may have resulted in losses to retail investors, by really putting them a lot of penalties and warnings and other administrative kind of guidelines. So right. I would certainly assume that after this particular caution, there is going to be a lot of action from SEBI, certainly.
Right, sir. Right, so lots of action expected from SEBI is what you're really hinting at. In fact, the market regulator has sounded caution several times in the past as far as the futures market is concerned. But Mr. Parekh, I want to understand from you, what are the loopholes in terms of regulations as far as the securities market is concerned? And when you say that there's going to be further action from SEBI, what exactly are you hinting at and what are the options that SEBI has as of now?
Yeah, so see, as far as the framework is concerned, if the SEBI regulations, and not just SEBI regulations, I mean, there are other disclosure requirements which come up under the Companies Act, which also come up under, let's say, the NAFRA and the Institute of Chartered Accountants guidelines, which are applicable to statutory auditors, for instance. So the framework is there. The question is how much of that is really complied by some of these institutions is where the point is. So, I mean, from the regulations point of view, disclosures and the need for disclosures, true disclosures, honest disclosure, is very essential. But if someone is really misusing that, with ulterior motives of, let's say, blowing up the price in the market, then of course there is non-compliance. And to that extent, whether that non-compliance is under the Companies Act or under the SHICI regulations, or under NAFRA, and now the new set of regulations coming from Ministry of Corporate Affairs. So those guidelines and SEBI guidelines are very applicable even to these institutions. But if they do not comply entirely, or the disclosure is such that the interpretation can also be misleading, then on a case-to-case basis, SEBI will certainly examine disclosures, examine whether they are really anywhere closer to the facts, and then act on it accordingly, basically. They may start with the show cause, but thereafter they may start examining and investigating in those matters.
Yes, so you mentioned about disclosure requirements, etc., and how they need to be beefed up. But is that going to be enough? What else, as a market participant, somebody who's watched the market, for a very long time, what is it that you are suggesting?
Yeah, so see, there is one more regulation which says that if there is any rumor in the market, particularly the social media areas, then it is the duty of the listed entity really to clarify to through the social media, say, platforms, to the outside world. Now, sometimes what may happen is that, let's say, some rumor is started by a section of people who may be interested, let's say, who may have ulterior motives. And then if the company does not deny or does not clearly indicate that those rumors or those messages which are sent out on the social media are void of facts, for example, then it becomes completely the responsibility of that entity, basically. And under the new regulations, there are prescribed.
Absolutely.
So that is very clear. I suppose the point that we are making is, how far is the entity really compliant, basically,
Yes, sir, and we'll have to see how SEBI really sort of cracks down on some of these SME companies that have been presenting bloated facts. But sir, one quick answer from you before we let you go. Now, we've seen the kind of, bull run that the IPO segment has seen. And just yesterday, we were speaking of the month of August, actually raising over 16,000 crores. But how do you really see this optimism around IPOs? Is this a bubble that's waiting to burst? Because a lot of, the interest is also sparked by speculations around some of these companies. Would I be right in saying that?
No, absolutely. See, I'll tell you, there's been this particular sort of discussion in the market today, in terms of saying that, look, there has been, the demand is actually the supplies, the amount of funds which are generated, let's say, at the household level, they're chasing the equity and the debt, let's say, in the security markets. If you look at SIPs alone, 23,000 crores of SIPs last month. And overall, let's say, new equity and debt purchased in the market is of the order of about 35,000 crores. Now, we have a huge demand that is chasing supply. The supply is only so much in the market, in which case IPOs become the, let's say, next point of attraction. Quite honestly, in my career, I haven't seen such a long run of primary market response, and at any rate at which, let's say, valuations is being carried out. People are still subscribing, they are still responding, they are still buying from the market. So in that situation, I would certainly say both. I mean, the banking regulator has also started becoming far more cautious in terms of channelizing the savings. And SEBI has been very proactive. I mean,
Yes.
on the SME, MSME, for example, where there's a certain amount of flare-up, sort of, or a burnt-up situation, there is certainly a caution that is being.
And so besides SEBI, this also comes under the purview of, some of these ministries as well, like the INB ministry or, for instance, the IT ministry as well. On that note, thank you very much, sir, for sharing your thoughts with us on this important directive, this important warning that has been sounded by SEBI as far as some of these SME IPOs are concerned.
If you like this video, then like, share and subscribe to ET Now.